Good morning and welcome to Nasdaq Sector Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at Market Site in Times Square, we have Adam Lazarus. He is a transport analyst with Nasdaq IR Intelligence, and he's here to join me. We're going to discuss what's driving the transport sector. Great to have you back with me, as always. And let's get a quick run through on your earnings outlook for the first quarter.
Okay, so we're pretty early into earnings. We've only had 15% of the S&P 500 companies for the first quarter report. But what we've gotten so far, at least, is we've seen rails, equipment rental have beaten expectations. We get monthly updates with the airlines, and we've had a little bit so far with them. And right now they're keeping costs low, which is pretty good considering that Brent oil continues to go up in price. And just this morning we hit a 6-month high above $73 a barrel as the U.S. is starting to waive the Iranian crude export exemptions. The only sector that's been lagging within the transports has been the truckers, which had weak earnings, and they're showing lighter truckloads, which brought the sector down last week.
All right, now speaking of the airlines, the Boeing 737 MAX, let's get an update on the 8 because this doesn't seem to be like it's going away anytime soon. And the report on Wednesday, I believe?
Well, Boeing reports on Wednesday,
yeah.
Yes. So what we're seeing at least is it's still grounded by federal aviation authorities across the globe. So airlines have been going ahead and have been canceling flights, at least in the U.S., as far out as August. Now, they're not canceling all the flights. What some of the airlines are doing right now is some planes that are having non-essential maintenance or just other spare aircraft, they're flying some of the routes, so there's a limit on how many cancellations they do have. But this is just a temporary solution. They only expect to do this for a month or two. So as we get a little closer into the summer months, we're likely going to see them have to pull some of these flights because then they're going to have their essential maintenance.
Right.
And once that happens, we'll see lower revenues, which will hurt the bottom line as we get into the peak summer travel season.
Right. So with airlines, when they order their aircraft, I mean, this is like a 4 or 5 year cycle. It's not something you can just turn on a dime and decide they want to go to Airbus.
No, they have deliveries like through the next almost 5 to 10 years.
Right.
That were hammered out years ago. So they can sign something tomorrow, and their first delivery won't be till 2022. So in this instance, there's been some movement, at least overseas, that they've been getting X amount of planes each year, and they don't want any planes moving forward, especially like Lion Air has said it, and the previous airline, like, we don't want any more planes. But I'm not about contract law and can't explain.
Right.
But so right now, yeah, they can't switch. What a lot of times does happen is a lot of them either have Airbus or Boeing. They don't have like a 50-50 combination. It's either a lot of one or a lot of the other. So right now, at least, if they're not flying the 737 MAX 8, they're flying the Dreamliner, they're flying the 800, which have had no issues.
All right, now let's wrap it up here. Let's take a look at the chart. Looks like you have a year-to-date up here, up about 5.3% on the transport index.
Okay, so this is the Dow Jones Transportation Average. Right now we're seeing it's at the 11,000 level. So it's starting to hit resistance as it's approaching this level, as you're seeing today with the market just being lower. And that's the highest it's been since back on December 3rd, before we had the sell-off towards the end of the year. Now it's trying to get back to the all-time high, which was back in October around 11.5, which is about 5% off of the current level we're seeing. So that was the high before we had the fear of interest rates and inflation going higher. So it's sort of a wait and see. Earnings could be a big driver to push it back above that level, but it's just a little too early in earnings so far, and we'll see as we progress along. I mean, this week we have roughly 34% of the S&P 500 scheduled to report, so that could potentially be some triggers to push it either higher or lower.
All right, Adam. As always, appreciate the update. Thanks so much for joining me. And thanks for joining us for Sector Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.